Street winners as the markets spiral downwards and continue to decline. I think what we're seeing here is Trump accomplishing one of his goals. I mean, obviously, he doesn't want the market to crash completely, but he is hoping for lower energy prices, which is something that he's getting with crude futures down under $66 a barrel. And he is seeing treasury yields fall. So even the 10-year, you can see down point one or I guess 10 basis points is what it's down. So it's not down as much as he'd like to see, but that is going to reduce the cost of borrowing in the US. Now it is driving up the VIX. The VIX is up 6 points today. So that's a pretty big move. That's kind of a sizable move or a comparable move to that of the DeepSeek AI announcement out of China. And all of the markets are really in a bit of a sense of panic right now in terms of probably more selling than buying, and prices definitely dropping. But this is going to be short term and temporary. So it may not be the end of it. And I'm certainly not suggesting today's the day to buy the dip. But I think that when we see the delay of tariffs and just the threat of tariffs, that is enough to accomplish some of the new administration's goals. And once they are able to hammer out new deals and negotiate better rates on their debt, which should happen with Federal Reserve Chairman Jerome Powell probably cutting interest rates in the near term. We should see markets probably start to recover as we move into the late spring and early summer of this year and get into maybe late Q2, but more likely Q3 earnings, as long as earnings are positive. And by that time, we're more likely to have a positive future forecast because we'll have more clarity and less certain and more certainty, less uncertainty. We'll have more certainty around tariff policies and the effects of those. So we're definitely in for some short-term pain, as President Trump alluded to in his State of the Union last week. And we're seeing that right now. So hopefully your portfolio hasn't taken a massive hit, but it likely has based on the downturn right now. But this is a temporary setback in the larger picture, and things will recover because we've got a lot of companies here that are getting pummeled that are very strong organizations and have strong revenue, strong earnings, and will be producing strong cash flow. So stay in cash if you can, stay risk averse, preserve that capital that you have and the buying power, because there will be a time to buy back in and ride this back up. Right now, you probably want to be buying some puts. Wouldn't probably recommend doing it today, but if we see a bit of a bounce back tomorrow, might be a good idea to maybe look at a couple of puts on the overall indexes and markets so that you can protect yourself from further downside. Good luck in your trades today. And if you're liking these videos, please hit the like and subscribe button.